Investing in Security and Prosperity, an exploration of the US-Japan $550 billion Strategic Investment Fund. Imagine a future where economic ties between nations redefine global industries and enhance security. The recent trade agreement between the United States and Japan marks a significant step in this direction, with Japan committing to a staggering $550 billion investment aimed at revitalizing key American industries. However, this agreement does raise some vital questions about its execution and implications. To break down the complexities of the recent collaboration, it's crucial to understand the Memorandum of Understanding, MOU, signed on September 4th between Secretary of Commerce Howard Lutnick and Japanese Minister Ryosei Akazawa. This MOU illuminates the paths of investment that both countries will pursue, underscoring their strong partnership in industrial and security initiatives. Key features of the MOU. What exactly are the critical elements of this MOU? Here are the highlights. Deadline for investment. Japan is expected to disburse the full $550 billion investment before President Donald Trump's term concludes on January 19, 2029. Targeted sectors. The investment will focus on strategic areas such as semiconductors, pharmaceuticals, essential minerals, shipbuilding, energy, including pipelines, artificial intelligence, AI, and quantum computing. Establishment of an investment committee. The President will establish a dedicated committee to recommend suitable investments, chaired by the U.S. Secretary of Commerce. Consultation Committee, comprising representatives from both nations. This committee will provide guidance and legal advice to the Investment Committee regarding project recommendations. U.S. Investment Accelerator. This newly formed office within the Department of Commerce will manage the investments, with the Secretary empowered to appoint its executive director. Special Purpose Vehicles, SPVs. For every investment made, a SPV will be created, governed by the U.S. or its representatives. Project Proposals. The U.S. will put forth investment projects for Japan to consider, with an expectation of a response within a 2-month timeframe. Profit Sharing Structure. Initially, profits from projects will be evenly shared until Japan recoups its investment. Thereafter, the U.S. will take 90%, while Japan retains 10%. Section. In preference for Japanese suppliers. Japanese companies will be prioritized for contracts over foreign entities whenever feasible. Both countries will honor their own legal frameworks throughout this process. Significance of the agreement. The MOU outlines several noteworthy implications. 1. Commitment from Japan. Although Japan retains the ability to reject investment proposals, doing so could signal a waning interest in certain projects. This also places pressure on Japan, as the U.S. may retaliate with tariffs if Japan declines to participate in the initiatives put forth. 2. Understanding of financial obligations. The agreement frames Japan's investment as a debt, which means that the U.S. is essentially managing a debt obligation to Japan. Unlike conventional loans, Japan will continue to benefit from 10% of profits beyond recovering its initial input, potentially leading to revenue streams over the long run. 3. Encouraging Japanese investment choices. The MOU aims to inspire Japanese corporations, often characterized by their conservative investment strategies, to take calculated risks. The balance of potential profits and the tariff threat may drive these companies to invest where they otherwise would hesitate. 4. Proactive Japanese engagement. The agreement signals a clear expectation for Japan to actively engage and propose joint ventures in sectors critical to both countries. This proactive approach is essential in a landscape where the U.S. is keen to welcome beneficial foreign investments. 5. Lessons for global partners. The success of the U.S.-Japan agreement could set a precedent for other nations, including the European Union and South Korea, showcasing how strategic investment partnerships can bolster mutual economic and security interests. Conclusion. In summary, The past months have seen an intense focus on negotiating trade and tariffs, culminating in this landmark agreement set to reshape industrial collaboration between the US and Japan. With Japan at the forefront of this strategic investment fund initiative, it stands at a pivotal point to influence its economic trajectory in tandem with US interests. As we ponder the future of this collaboration, an intriguing question arises. What should be the first area of investment that both countries should explore? Let's engage in a lively discussion. Do you think this investment fund will lead to beneficial results for both countries? Or could it create tensions instead? Share your thoughts in the comments.